welcome to the CNBC TV 18 special. We're on the sidelines of the World Economic Forum's India Economic Summit and in conversation with Uday Kotak. Mr. Kotak, appreciate you joining us here on CNBC TV 18. Let me start by asking you, as far as interest rates are concerned, the finance minister said that the environment is right now for the Reserve Bank to move on rates. If he needed any help, it's coming from the former finance minister, Mr. Chidambaram, also agrees for what it's worth that the Reserve Bank should move on rates. I know your base case when we last spoke was early 2015. Do you believe that we could be surprised as far as an interest rate cut is concerned?
I would say my base case is still February, the policy meeting of February. But I will not be surprised if I'm surprised by a December cut.
The likelihood of a December cut, you think, has gone up substantially?
I would still say that 70% probability February, 30% probability December.
But what's changed your view? Is it because of the kind of noises that are coming in from North Block, or do you believe that because of what we're seeing happen as far as crude prices are concerned and also inflation, that the time now perhaps is right for the Reserve Bank to act?
I think the drop in crude is phenomenal. It's not a 5 to 10% drop. It's more than a 20% drop. And in a country where we import $150 billion a year at $105, it's $30 billion of savings. So that's a lot of money which is saved, which dramatically improves current account and has a ripple effect across the inflation matrix in various products.
So we could be surprised in December?
I would say probability is still 30%. I would still put a 70% probability of a February cut.
Okay, let me now talk to you about the markets. The last conversation that we had, the markets were at new highs. Today, the markets have moved to another high, historic highs at this point in time. You talked about how this is going to be a rally that's going to be driven by the capital markets, and that's exactly how, or recovery that's going to be driven by capital markets, and that's exactly what's played out. Much more steam, much more room for a further upside from these levels?
I think first, the economy, I believe, has bottomed out. We are seeing early signs of a gradual recovery, but I would say a full-blown recovery is probably 3 to 6 months away. Therefore, I still hold on to 5.5% economy growth or GDP growth for the current year and moving up. The markets are enthused by actions globally and significantly more new financial savings and equity investors' money into Indian equities, including equity mutual funds.
So let's talk about the global trigger. And you talked about the concerted central bank action and Japan being the latest trigger that certainly seems to have buoyed sentiment and enthusiasm. Given that, what kind of upside would you see from these levels?
I would say that it's very difficult to say X% or Y% because there are lots of variables out there. But the trigger for me, in addition to global factors, is now Indians are moving money into financial savings. And we can see it across the curve. We're seeing more money in bank deposits. We're seeing more money in equity mutual funds. We're seeing a pickup in money coming into insurance. So we are actually feeling that finally the Indian saver has recognized that there is life beyond gold and real estate.
But by budget, people are talking about levels of 9,000 on the Nifty, for instance. Another 20%, 25%, 30%?
Don't make predictions because you can be wrong the next day. But I would say that the bottoms have moved up. Therefore, if your bottom earlier was 7,500, I think that has moved up to somewhere like 77, 7,800. But remember one thing, as you move higher, the risks of some event and the impact of that can be higher.
You said that the economy has bottomed out and the recovery is still at least 6 to 9 months away. But in terms of credit offtake, we haven't really seen credit offtake pick up significantly. When do you see that turnaround taking place?
I think there's a significant need for declogging. Lots of projects, including in the infrastructure sector, which were in clogged state, as they start declogging, as actions of government and the system work towards declogging, we will see the beginning of the investment cycle gradually picking up.
So another 6 to 9 months away for that as well?
I think so. Probably 6 months away, and I stick to my position, Achhe din, dhire dhire, but long term.
No, you started with saying Achhe din aa gaye, then you moved to saying Achhe din aayenge. Now you're saying Achhe din dhire dhire aayenge. So you're qualifying every couple of months, Mr. Kotak.
I'm saying Achhe din dhire dhire aa gaye hain.
Okay, Achhe din dhire dhire aa gaye hai. But on the issue of reforms and what you heard from the finance minister today, What are you most confident about this government being able to pull off? There are a lot of slogans on the table at this point in time. Make in India, Jan Dhan, Swachh Bharat Abhiyan, red tape, red carpet, so on and so forth. What is the one that you really believe could have the potential of getting us to move much faster as far as the economic recovery and investment cycle is concerned?
I think declogging of the investments in the infrastructure sector, particularly where government is the cause of the blockage, I think those will be cleaned up. I'm hopeful of GST. Which, if it happens, that will be a big plus. So I think step by step, and some corrections selectively on things like land reform bills. I think the companies bill, the new companies bill, which has got a lot of issues, either clarification through rules or possible amendment. I'm hopeful between now and March.
You know, the Corporate Affairs Minister State Nirmala Sitharaman said that she believes 75% of industry's concerns with regards to the Companies Act have been resolved, and they'll wait for further feedback to see whether more needs to be done. But on the infrastructure issue, because this is a story that we broke on CNBC TV 18, the government has written to the Reserve Bank to relax what the government sees as the RBI stringent circular that was issued in August as far as infrastructure lending is concerned. Do you believe it would be appropriate for the RBI to perhaps review that circular, and will this aid the recovery as well?
See, financing problem is a derivative of the real problem. If we fix the real problem, I think financing problem is easier to fix. But if we don't fix the real problem, then we are trying to find financial solutions to a real problem. And I think the government seems to be focused on finding solutions to the real problem, which is now you've got some action on coal. So let's see how the whole e-auction goes.
What's your own sense about the e-auction? How confident do you believe
I think it should happen in the first quarter in 2015.
Well, they don't have a choice because that is what the court has said. But do you believe that we are going to see enough takers, and what's your own sense about how it's going to work?
I think we will find a solution. And it is not going to be painless, but we will find a solution.
Okay. You know, speaking of other reforms which are pending at this point in time, and this whole business of the ease of doing business that the government keeps talking about, but in your conversation with other industry leaders, what's the sense that you get today? Sentiment has changed, confidence has returned, but has there been enough movement on the ground for us to really see the kind of turnaround that you're talking about?
I think advise all your corporate friends that this is a great time now.
Your corporate friends, sir. Our corporate
friends. So we should really think about how they can be refinanced, both by equity markets and debt markets or private equity markets. And I continue to believe that capital markets will drive the Indian recovery process.
What does that mean then for you as well? Our last conversation, you were talking about being on the lookout for acquisitions. There's been a lot of rumors in the market about what you are looking at or who you perhaps could be talking to. Anything on the horizon at this point in time?
Shereen, I'll come back to you if I have something.
But nothing as of now?
Nothing as of now.
You're not in talks with anybody?
Nothing as of now.
Nothing as of now. In terms of M&A action as well, and we are seeing a big push towards bringing FDI into the country. Anything in specific, any sectors in specific that you're going to be watching out for, where you see that we could perhaps see FDI coming in sooner than
I'm watching how defense plays out, because government has opened up for defense. I think a number of Indian businesses are interested. They will be talking to global partners for joint ventures. Therefore, I will watch the defense space closely. The second space which I think is going to be very interesting is the digital space. And I see transformational move and India leapfrogging through the digital space in terms of development.
When we talk about digital, and this ties in with not just Digital India, the vision that the government has set out, but also this vision of smart cities and new cities and so on and so forth. Just from a sheer infrastructure push and what this could do in fact to India's GDP. We don't have a clear roadmap of how the government intends to go about these 100 smart cities or any of that. We have some pieces of what it intends to do. But what could that then translate into in terms of real economic benefits?
My personal view is significant new infrastructure is at least 12 months away before it starts getting the whole investment cycle. For the next 12 months, declogging of existing projects is the focus.
Getting back to the markets, you said it's perhaps made a higher bottom at this point in time, Mr. Kotak. Any areas in specific that look most promising to you, and where you believe that valuations perhaps are not stretched, where you actually see more money coming in? Any sectors in specific?
I think clearly, one derivative or the reference point for the economy is normally the financial sector. And I am in the financial sector. And if more and more savings are going to go into the financial sector. The financial services industry should do well as long as it manages risk well.
You know, speaking of risks related to the financial sector, and there have been red flags on the NPA issue. Very recently we saw Moody's also raising a red flag with respect to the sector as a whole and in specific with certain banks in particular. Do you believe that we've seen perhaps the worst as far as the NPA issue is concerned?
I think look at NPAs and restructuring together. I believe in the next 6 months the banking system will see a significant surge in restructuring. That is because the RBI stops the restructuring window from 31st March 2015. Therefore, there will be a rush of borrowers and banks which will want to restructure loans between now and March. And I'm hearing numbers as large as 100,000 crores which will get restructured between now and March. And that effectively for me is postponement of the problem, not the solution of the problem.
So we're not done with the problem, anywhere close to being done with the problem then?
Not yet.
So what do you anticipate to happen on this front given this deadline and given the fact that the recovery as far as the economy is concerned is still at least 9 to 12 months away?
I think this is a cleansing process. We have to go through it. At the same time, if interest rates begin to come down, that will be helpful for banks to refinance themselves and corporate India to breathe a little easier on cost of funds, and combine that with a reasonably positive equity market scenario. You could see a sustained turnaround, and I stick to my view that over the next 5 years, average GDP growth, 6.5% plus.
You know, another area where the government has raised issues with the Reserve Bank is as far as ECBs are concerned, saying that there should be a level playing field for Indian banks and foreign banks when it comes to ECBs. They've also asked the Reserve Bank to review earlier circulars that had been issued with regards to this matter. What's your take on that?
I think it's a good thing, but corporate India should be careful, because right now they believe that borrowing in dollars and keeping it open is a great way of saving interest rates or interest cost. I think they've got to be careful of managing the risk with open-ended dollar positions for rupee use. And I would be cautious, and I will watch at unhedged foreign currency exposures of corporate India.
Speaking of the currency, what's the view as far as the rupee is concerned? Given the strength that we're seeing coming into the dollar, where would you see the currency over the next few months?
In my view, finally fundamentals will prevail. If the Indian inflation is, say, around 7.5% over the next 12 months, hopefully lower, and if the dollar inflation is 2%, then logically 4 to 5% is the difference. Adjust for productivity gains, I would still say 3 to 4% a year is what India should be ready for depreciation of the rupee.
On that note, it's time for us to take a break. When we return, we continue our conversation with Uday Kotak.